What's up everybody and welcome to the video. And in this video what we're talking about is 4 dividend paying stocks that I believe are stocks to buy and hold forever. They have incredible upside potential. One of these is actually an ETF yielding just above 9%, almost a 10% dividend yield, which is insane. I know it might sound too good to be true, but I've done my research and this is a very high quality ETF. In my personal opinion, in history has shown that it is high quality. These stocks have so much upside potential in my personal opinion. We're going to be going into some slightly deep analysis on these companies, but before I do go any further, like I said, if you enjoy the video, make sure to give it a thumbs up and you subscribe. Turn on post notifications for videos coming out every other day. I'm posting as much value as I possibly can. Enough of that yada yada, let's get into this video. So what we're looking at right now is my current portfolio, my dividend portfolio on M1 Finance. If you want to use the link in the description below or in the comments, you can sign up, get a free $30, and you'll also get a link to my pie. It's 100% free. You can just use this if you want it, or if you just want to see what it looks like, you can always check it out. There's 6 different slices within multiple stocks and ETFs within each slice. But enough of that. Let's get into the first stock that I want to talk about in all 4 of these stocks and ETFs that we're talking about. I do currently own, and the first one is Microsoft, ticker MSFT. I'm sure you know who Microsoft is. The past year alone, up 62.68%. They're currently trading at $332.52 per share, currently yielding a 0.75% dividend yield, which is slightly low. Every single stock that we're looking at in this video, the yield will be increasing stock after stock. They have a market cap right now of $2.49 trillion, the second biggest company to be traded right now. Incredible stuff. I don't see Microsoft failing anytime soon. Looking for a growth stock, here's 3 reasons why Microsoft is a solid choice according to this article. So first off, the company's earnings per share is expected to grow 15.3% this year alone, which is crushing the industry average, which is an average of 11.6%, which is incredibly high. That is very high, and Microsoft is making incredible returns. The historical EPS growth rate for Microsoft is 24.2%, but you got to focus on the projected growth, and that is still incredible returns year over year. The cash flow growth right now, year over year cash flow growth for Microsoft is 26.7%, higher than many of its peers, which is the industry average of 15.2%. Annualized cash flow growth rate has been 19.6% over the past 5 years, which is beating the industry average of 12.4%. So this is incredible stuff. Furthermore, there have been upward revisions in current year earnings estimates for Microsoft. The Zacks consistent estimate for the current year has surged 6.5% over the past month. What this means is that as time goes on, analysts continue to increase how much they think Microsoft's earnings will continue to increase. So they're upping the number because Microsoft just keeps adding momentum to their company, adding better earnings. Looking on a deeper dividend summary, they have a payout ratio of 27.05%, which is very low, a 5-year growth rate of 9.24% on their dividends, and a dividend growth record of 11 years. Now, today is currently November 2nd of 2021. If you want to buy before November 17th of 2021, you'll be getting their next dividend paid out on December 9th for 62 cents. The analyst price targets for Microsoft are very solid. The average is still giving us a 9.48% upside, highest price targets being of $407 per share with a low of $320. But right now we have 22 buy ratings, and this is huge upside potential. These are all 1-year analyst forecasts on the stock. Looking onto some more stuff, Microsoft is undervalued by 0.67% relative to their discounted cash flow model. Looking on some more stuff, they say that the intrinsic value of Microsoft is $352.39 per share. So Microsoft, in my personal opinion, has massive upside potential to be a great buy. I currently do own the stock. Looking on our second stock of the list is StarBucks, ticker SBUX. Now, a lot of people are a little bit sussed out by this company. They don't know if it's worth the buy. They don't know if they should buy it because there are some different things that's going on with Microsoft. The growth, they say, is slow, year to date only being up 2.64%. We are actually down over the past 6 months by 4.1%. Went up to $126 per share, but now we're trading downwards at $109. Now we're at $111 per share, which we're up 1.4% on the day. They have a dividend yield of 1.79% and a dividend rate of $1.96 per share. Now here is no surprise. This is big catalyst, long-term thing on Starbucks. Starbucks will focus on new store growth internationally in 2022. They're going to add 2,000 new locations in fiscal year of 2022. 75% of them will be coming from outside the United States. And Starbucks is more loved in China than in the United States. So international stores generate higher profit margins, and they're going to be opening 75% of these new stores will be happening outside of the United States, operating higher profit margins, giving them more profits to pay out to shareholders to increase this dividend, which is the number one reason why we're in this stock. So 2,000 stores in 2022, that's 70% growth from the 1,173 stores that opened in 2021. And of these 2,000, we talked about it, they plan on having a lot of them to be international. Of the 1,173 stores they opened last year, 654 of them were international in China. So what we're seeing right here is, check this out. 1 in 2 consumers in China prefer Starbucks when buying coffee away from home. So 50% of all consumers, whenever they're not at home, where are they going to go? Starbucks. That is the moat that Starbucks provides. Insane stuff. Now, the increasing focus on international growth could fuel increasing profit margins. We talked about it. Their international stores have higher profit margins, so it comes along the way. They expect fiscal 2022 operating margin to be approximately 17%, but by 2023, they expect it to be 19%. The average is 18.1% since 2016. That was the highest that it's been since 2016. So we're expecting 19% profit margin in 2023, giving us more room, more revenue, more earnings to pay out a nice dividend to shareholders. Now, Starbucks dividend payout ratio is currently sitting at just below 57%, an incredible 5-year growth rate of 17.61%. Buy the stock before November 10th, and you're going to be getting that dividend of 49 cents per share, a nice dividend growth streak of 11 years. Starbucks current analyst right here, what we're seeing, 15 buy, 17 hold, 11.35% upside on the average price target, and a high of 142 and a low of 105. Right now, it says that Starbucks is undervalued by 3.52%, and the intrinsic value is $275 per share, pretty much $276 per share. So currently looking at it, it's pretty undervalued. Now, the third stock on the list is a REIT, and that is Store Capital Corporation, with a whopping dividend yield of 4.47%, up 33.97% over the past year. Year to date, we are up 1.32%. So the growth has been a little bit volatile over the past few months, past year to date, sorry about that. And we are down 3.8% over the past 6 months. But long term, this management team is incredible. Looking on some rating summary, SA authors, Seeking Alpha authors, 3.6 score, Wall Street bullish 3.66, valuation, everything is incredible on this company. Profitable, growth, valuation. The only thing not there is momentum, and that's because it's not a growth stock. You don't expect to see much momentum in value stocks. Now, what we're looking at right now, it's got a $9.31 billion market cap, but here's just a kind of capital snapshot. They're in a $9.4 billion equity market. They have $10.4 billion in gross assets, 2,738 properties, and 529 leading national and regional tenants. Looking onto some more stuff, this is kind of just a market overview. This is Store's target market. This is the rated companies, like investment grade rated companies and small companies right here. Their target market is approximately the same size as the world's third largest economy. They have the opportunity to be selective to get tenants who they know are going to pay, who have investment grade credit, who are going to pay these, and make sure that they're not just having unnecessary expenses. And direct customer relationships are roughly 80% of their acquisitions, which is incredible stuff. Looking at some more stuff for Store Capital, they have a payout ratio of 82.41%, but they're a REIT, so that's what you kind of have to expect. A 5-year growth rate of 5.9% and a dividend growth streak of 6 years, but they are a little bit newer of a company. Like we can go right here onto the 10-year. You can't even go back that far. You can only go back till 2014 when they were $19 a share. And looking at some more stuff, their ex-dividend was in September, but it will be coming soon. Looking on this, 4.47% yield, which is incredible stuff. Storage price targets 5 hold, 1 buy, average price target of $36, which is 3.51% upside, high of 39, low of 33. This says Store's intrinsic value is $113 per share. Now, let's talk about the last stock, which is actually an ETF, which is my favorite covered called ETF XYLD. Global X S&P 500 covered call ETF. Ever since this thing was created back in 2018, it's up 15.26% since then, a whopping dividend yield of 9.15%. Over the past year, up 17.72%, and year to date, up 8.73%. Incredible stuff. So what XYLD does is they track an index of S&P 500 stocks and sell 1 month at the money call options on up to 100% of each stock. So what they do is they sell options saying, hey, if this stock, we'll just use Apple for example. If Apple stock hits this price, we'll sell it, but you're going to pay us, so we'll sell you at that price. And what they do is they take that money that they pay them at first, and then they pay it out in dividends, and they also get expense ratios. They have an expense ratio of 0.6%, but the dividend yield is insane. They have a dividend growth record of 2 years. 20.77% is their dividend growth rate. Right now, the ex-dividend was in October, but it's a monthly paying dividend yield. So buy it sometime soon. You'll get that dividend for November's monthly payout. But everybody, that is what I have for you in this video. So if you did enjoy it, make sure to subscribe to the channel, turn on post notifications for videos coming out every other day. I was like, see what you guys are doing. So leave a comment which of these stocks is your favorite, or maybe you like all of them, maybe you like none of them. I was like, see your guys' opinions, your guys' inputs. Don't forget to subscribe. Thank you for making it all the way to the end of the video, and I'll see you at the next one.